Good morning. Welcome to Web3 Wednesdays, where we chat through some of the complex and nuanced topics in crypto and Web3 at large so that you can stay ahead of the curve. So today I'm joined by three pioneers in the regulatory and venture space around blockchain. Angie Dalton, founder of Signum Growth Capital, is an SEC registered broker-dealer providing M&A advisory and private services for emerging tech and blockchain companies. Daniel Schoenberger, Chief Legal Officer at the Web3 Foundation, the organization behind Polkadot, and a number of other Web3 Forward grant programs and contributions. And finally, Josh Klayman, Head of Blockchain and Digital Assets over at Linklaters. Jointly, these participants played a major role in advising or executing arguments around Polkadot's recent spat with the SEC, which culminated in Polkadot declaring that it had morphed from a security into a software. They each represent deep foundational knowledge around the definition of securities within the digital asset space, where committees can add value by producing clarity through sensible regulation, and finally, what the digital asset space needs in order to move forward into the next major push. So, Angie, Daniel, Josh, we are very excited to have you all with us here today. Welcome to the show.
Thank you for having us.
All right. So Angie, perhaps first, and then Daniel, and then Josh, can you each briefly describe, what do you do in your day-to-day life in crypto?
Sure, I'll start. I day-to-day am the lead advisor to the Web3 Foundation on all things Polkadot. But as you know, Sam, my background is gaming, and I spend a lot of time thinking about new gaming models and Web3 gaming and how it will all evolve. I was working for a big media company in LA in search of the gaming meets blockchain solution, and just kept struggling with Ethereum and Bitcoin as base layers, stumbled upon Polkadot and thought, wow, this tech actually could be a base layer that something mass market like gaming could run on. And that's really how I got involved with Polkadot. But most of my time is spent analyzing games and gaming.
I love it. I love it. And Daniel?
Hi, Sam. So also hi from my side. I'm Daniel, the Chief Legal Officer of the Web3 Foundation. The foundation is actually a Swiss-based not-for-profit organization with the mission and purpose to nurture the growth of Web3, which is a lot bigger than DeFi or like anything security related here. I'm still relatively new to the space. I joined in May after spending like 13.5 years at Google, where I was heavily involved in AI policy, but in the core job there, the head of legal for Switzerland and Austria. So we understand ourselves as a technology foundation, much more than just crypto. And I think I will bring like that more holistic view, because we think that the whole space, especially the regulatory discussion, will evolve very quickly beyond what we're currently seeing, especially in the US, just around securities laws.
I think that's very fair. And I'm also excited to hear, kind of from your framing, where Web 2 was going with a lot of these things, how that sits within a Web 3 perspective, and, some of the lessons that we can take from that decades, of building that the world has gone through in the Web 2 side. And then finally, Josh, if you could chat through your side as well.
Sure. Thanks so much. Thanks for having us. Well, my name is Josh. I've been in the space for about 7 years. Prior to that, I was a finance and securities lawyer and corporate lawyer, doing a wide variety of leverage finance and other types of transactions. But within the space now, I would chunk it into a few different hats that I wear. So one is at my law firm, which is Linklaters, which is a global law firm. And there, together with my team, we represent a wide variety of folks, everything from issuers, such as, for example, Web3 Foundation, to other market participants, to large financial institutions, public companies, and the like, all of whom either are closely involved and natively involved in the digital asset space, or are trying to dip their toe in. So my focus generally is on the regulatory side, I would say. But it could be people wanting to form funds, people with wallet companies, you name it. With another just really quick hat, since 2016, I've chaired the legal working group of the Wall Street Blockchain Alliance, and I'm on the board of that. So that's another place, some of the brightest minds literally in the crypto legal space, particularly within the US, are part of that. So that's another hat. And then finally, I would just say I'm on the board of senior advisors for Wharton Cipher Accelerator. So that's another sort of touch point. But anyway, that's enough from me.
No, I love it. I'm also fond of Cypher over there. They do a great job. But guys, it's really exciting to have each one of you here today because you all really do represent a lot of the deep knowledge that we need to start, bringing to the broader community and informing them around some of these very complicated topics in the regulatory space. So starting at a relatively high level, I think it's important that we address Polkadot. So Polkadot obviously is what brings, you three here together, kind of in this capacity right now. So Angie, do you think you could walk us through, what is Polkadot? What is Polkadot not also?
Sure. So just as, bigger picture background, the Polkadot network was founded in 2014 by a handful of creators from the Ethereum network. So the founder of Polkadot, Dr. Gavin Wood, was previously co-founder of Ethereum. He was also CTO. He was the lead creator of Ethereum virtual machine and the Solidity coding language. So Polkadot was really built as a base layer of software for other blockchains to build on top of, not as a competitor to those blockchains. Some of the goals at the time were really to raise the bar on protecting end users, to remove all of these cumbersome aspects of Web 2, like the need to trust the counterparties will deliver. And then finally, to remove some of those cumbersome aspects of blockchain, like the requirement to pay high transaction fees, especially for basic activities. So a lot of people are even could be unaware of Polkadot because the biggest criticism of Polkadot has been its lack of marketing. This lack of marketing is really by design. It is software built for engineers, not an investment mechanism for retail. I say that over and over again. But what Polkadot is not, the aim of Polkadot was not to create any sort of alternative currency or method of payment. It was also not to be a smart contract network. Really, it's just built to be highly secure, vertical agnostic, use case agnostic, coordinating software. It operates one layer below all other networks like Ethereum or Bitcoin. And one analogy that we often use is the New York City subway. So think of the underlying value that the subway provides, which is completely detached from the value of all the points of interest at the various subway stops along the way. So the stops along the way are analogous to all other layer one blockchains like Ethereum, Bitcoin, the parachains that are built on top of Polkadot. And Polkadot is analogous to the subway. Providing
that's a neat picture. No, I like that. I think that frames it well.
Great.
Awesome. And so, you guys recently all jointly, have played some hand in this, kind of interaction with the US SEC, right? And the SEC, as we are all aware, has a fairly strong-handed way of nominating all digital assets as securities across the board. For some of the listeners here today, this idea of a security might be complex. So, in your guys' opinion, what is a security and why, frankly, should people even care about this definition inside of the digital asset space itself?
Thanks. And so let me just say first, none of what we say is legal advice, investment advice, tax advice, any really advice.
Yes, please. Broad disclaimers across the board, guys. Feel free to drop them in. And viewers listening, none of this constitutes any form of advice in any capacity.
And one other thing I just would say before I get into what is a security is just at the beginning, I noticed that you said our spat with the SEC. And I just wanted to clear up, we didn't ever have a spat with the SEC, right? It was really proactive, positive engagement. And so I think that's really, really important. I know you meant it just in like a catchy way, but just for all the listeners out there was no spat. That's the kind of action that we need, right? Is we want people to, line up proactively with the regulators. That is the type of positive activity that we do need across the entire space. So no, I think that's a good segue, Josh. That's totally okay.
And it's good that you added that just to, sorry to jump in, but people know about the enforcement division of the SEC. We did not deal with enforcement ever. We were dealing with FinHub and Corporation Finance, two other divisions of the SEC. Sorry, Josh.
Yeah, no, it's a really neat observation, because most people really on the retail side are only aware that the SEC comes down like, ham-fisted on folks sometimes, but they're not aware that you can go and engage constructively with other branches, inside of these regulatory bodies.
Yes, you absolutely can. Although, and not legal advice, but we would recommend that you bring counsel.
Of course,
right?
of course.
So, anyway, on to what is a security. A security, there have been books written about what is a security. I mean, at its most basic, it's a form of investment. And if you look at the U.S. securities laws within the Securities Act of 1933 and the Securities Exchange Act of 1934, for example, there's a laundry list of what constitutes a security, right? A stock, a bond, all sorts of things. And so those are specifically enumerated types. Now, there is this mysterious term, and this comes up a lot in digital assets, of investment contract. And there's no definition of what an investment contract means in those statutes that I just mentioned, the 33 Act and the 34 Act. That's something where the courts had to decide what that meant. And so a lot of time is spent talking about something called the Howey test. Won't go into it in detail here, but that was a US Supreme Court case. And part of what that was doing was looking at what constitutes an investment contract, and it set forth a 4-part test. I'll just run through it since I just mentioned it. An investment of money in a common enterprise with a reasonable expectation of profit based solely or primarily on the managerial or entrepreneurial efforts of others. And that's been interpreted through the time. But that's where a lot of our focus has been in the digital asset space. And that's where a lot of enforcement has been, and where the SEC has provided guidance, even a framework on investment contract analysis of digital assets. This is important too for the digital asset space. Even if you don't have an investment contract, you could still have a digital asset that looks like one of the other types of a security. So it might look like a bond, it might look like a stock. And so you need to be aware of that as well. And why does it matter? Well, because there are certain protections available for investors, purchasers, and you have to, there are rules you have to follow. And if a digital asset is a security, or if a scheme or sales and marketing and offering process is the offering of a security, there are rules, there are disclosures, there are exemptions, and then every touch point down the chain, if something is a security, if it's trading on a platform, there are securities law requirements that apply to that. If you have a fund, there are securities law requirements that apply to that. So it's just very important, the point of whether something's a security.
No, that's a great and very, very in-depth explanation, which is exactly what we need, right? Because it sets the stage for so much else, that we have to explore here, because Polkadot as a complex, software environment being classified as a security or not has all of these downstream implications, right? What exchanges can touch it? How can retail interface with this, right? And so I think this is a good time, to kind of segue into chatting about Polkadot and the SEC, what transpired there and what impacts, might we see on other projects in the space who are looking at what happened, with Polkadot and the SEC, and, what can they take away from this? What is there to learn?
Sure. I think responding to that question requires going back a little bit to like the initial Web3 idea, and then also back to Polkadot and what the dot token actually is, because that's really important here. So the Web3 vision really wants to deliver a better and fairer internet where users are put back in control over their data, identity, and destiny. And Polkadot is actually one approach, like a tech approach to put that vision into practice. And the dot token has got three very distinct utilities, and that's important to consider here. So it's used for securing the network by staking. It's used for participating in governance. And it's important to say that this is fully on-chain governance, and Polkadot also has a fully on-chain treasury. And the third use is bonding it if you actually want to run a parachain. That's one of these layer 1 blockchains that build on top of Polkadot. So we actually always thought of DOT as merely coordinating software. It's a tool. It's essentially a digital representation of a right to access and participate in the network. So that said, when we contemplated a network launch, there was never an intention to launch a security or engage in any form of DeFi here. However, as things stood, and there was at the end of 2019 with many enforcements happening, we also understood that the SEC would very likely consider any token to be delivered after the initial fundraising as a security. But we also understood that legal framework, and Josh will talk about this in further detail, that this legal framework also provided for a way out. So it essentially said, if a token loses its characteristics as a security over time, it morphs and is not a security anymore. And that's exactly what we wanted to achieve, like get out of the realm of securities laws as quickly as possible. So 3 years ago, we went to the SEC, took them by their word, engaged with them, and this kicked off a series of meetings that continued over 3 years. Now, did we necessarily like all these legal assessments and these positions of the SEC? Maybe not entirely, right? But that's probably not the point here. Essentially, there were two choices at the time, and like applying that framework was really our best approximation there. So, we could decide to throw our efforts behind building great tech that was to be compliant with the law, or essentially prepare for litigation. And we very clearly opted for the former because we absolutely wanted to avoid a Telegram-like situation where the launch of Polkadot was blocked. So we pulled through. It wasn't easy, but looking back, the process worked for us. That said, the process was iterative. It was engaging and quite flexible. So other projects might actually arrive at a similar result as we did, but slightly differently. But certainly, like going out with that announcement was one reason for that was to inform others around this.
Sure. And I like that framing too, that you view this as kind of a repeatable playbook even that other projects can observe, and, they can learn from Polkadot's strategy here and potentially, obviously given their own counsel, look to deploy something similar to this, on their own side as well, right?
That's exactly the point, yes. Excellent.
And so I think let's dive into a little bit around the actual argument, right? Because that forms the meat of the case here. And so, can you guys chat a little bit around the morphing argument, right? That Polkadot, it was perhaps a security at some point potentially, but it has certainly now at this point morphed into software, right? And do you expect regulators to kind of respond to this argument? And how have they publicly, responded to arguments like this to date?
Sure. And before I start on this and before we start, I think it's just important to mention this is not meant to be adversarial at all to other projects, right? There are certainly so many different paths that can be taken forward for our industry. Some people are focusing on potential new laws, right? Others, are engaging with active litigation, right? And making arguments there before a court, right? This is just an alternative approach. We saw what was out there and we decided to take the SEC up on its offer to come in and talk to FinHub. So I think that's just important as we go through this analysis. It's not meant to be exclusionary or saying this is the only way forward.
Agreed. And given that the regulatory space has always been, a messy space to operate in, that's why we obviously all need good counsel. I think it makes sense, right? There are going to be many paths to success here, and this, may end up being one of those, right?
Yes, yes, definitely. So, okay. So thinking back to frankly, 2017, I'll just mention very briefly the Dow report when it came out, right? It was the SEC's first real line in the sand. And I won't go into everything that was said, obviously, but it was clear from the Dow report that the SEC was saying that the Dow token itself was a security. Right. And it talked about the downstream effects, et cetera, and said no matter where you launch from, if you're selling to U.S. persons for fundraising, sales of a digital asset, U.S. federal securities laws are going to matter. So just bear that in mind, right? And since then, we've seen a lot of enforcement actions. We've also seen from the Telegram case that basically the argument that people had tried to make that something could change form through a SAFT, right? So you would sell something pursuant to an available exemption from registration, right? This piece of paper, the SAFT, and what you would deliver, even though what you sold was a security, that you would somehow in the interim build out your token, build out your blockchain and your ecosystem, and then you deliver something and it wouldn't be a security. We've seen from the Telegram case that that actually doesn't work, right? The SAFT can work for a purpose, but not for that purpose. Mm-hmm. And what the Telegram court said, among other things, essentially was that you look at what happened at the time of the initial offer and sale. And the delivery of that token is not a distinct transaction from that initial offer and sale. So if you sold something, pursuant to an exemption from registration because you knew you were fundraising, for example, you need to deliver it pursuant to that same exemption from registration to the same person, and you need to comply with the requirements for that. So making sure that people are not purchasing for resale, for immediate resale, for example. They're purchasing with a view to consume, things like that. Just many, many factors that I won't go into. But we think of it as, you throw the ball up pursuant to an exemption, you catch the ball pursuant to an exemption. And so Telegram having just, the SEC having just filed suit against Telegram at the time when we began to speak with FinHub, this was really on our minds, and it was on, we believe, the regulators' minds as well. Yeah. So part of what we did was say, okay, we're buying into this, right? We're before the regulators, we're buying into this. What can we do to get out of this? And the SEC has very helpfully, I will say, provided a way out. People might not necessarily like this way out, but there is a way out of being a security, even if you initially sold something as a security. And that is through its April 2019 framework that it released, which is available online. And that is the investment company analysis for digital assets. And so within that framework, it gets a lot of flack. People say, oh, almost everything is a security under this. And if I were the SEC, I'd say, yeah, that's what we're saying. That's exactly the point. But there also are 9 factors where it says, something initially sold as a security may be reassessed at a later point and may no longer be a security. So part of our process was to show, look, we're applying our facts against this framework. Mm-hmm. And look, we, in our view, have satisfied these. And part of this involved, and I think Angie may be better placed to discuss some of it, but putting in place processes, that tech gurus are going to talk about the tech, not market the token, that there's going to be a limitation in the hold by the foundation and its affiliates of tokens, because as Daniel said, one of the functions is governance, right? And so there are multiple factors about that. I will just say before, I guess I hand over to Angie and Daniel about this point, in terms of reaction from the regulators, well, there hasn't been, that we've seen, a public reaction. There certainly have been speeches that maybe others may want to talk about, but what we can say is during the process, not one time did anyone ever say that this didn't work or that our analysis was wrong. And given that we hope to have long futures in the industry and in legal and in broker-dealer world and the like, and that, we are licensed, these are not claims that we would make if we had any doubts in our minds.
Absolutely. And that makes sense. And you guys, you approach this from a very, very strict, regulatorily compliant framework. And that's, it's a case that I'm going to be very, very closely watching going forward, because I think that as you just, described, Josh, you guys went to the SEC and you said, you guys wrote down these points. We have addressed each one of these points. Where do we stand? So Angie, I'm curious to get your take on this here too.
Yeah, so what I'll add to that is in the back of our minds, we were thinking of the idea of decentralization. And of course, it is important to deliver decentralized technology. The Nakamoto coefficient, which is widely recognized as the key kind of metric for how decentralized a blockchain network is, Polkadot just ranked at the top of that list. And which, so I feel like on the tech side, we're covered. Also, it was one of the first proof of stake, if not the first proof of stake network. So lowest carbon footprint within the industry. All of the tech side is covered. And the harder part is having a 20-year history in securities and capital markets, and kind of in the process of taking companies public myself. There were several items in there, like disclosures, which are just a natural, because over 80 years ago, the SEC set up these laws, and a core tenet of the securities laws is disclosures. Disclosures, business processes, and communications. Anytime an entity has material non-public information, one has to care about making all of those disclosures. And, then there were other things that were specific to crypto, which are, not doing agreements with exchanges or market makers, because that's something that also is kind of a no-brainer in traditional securities, but it has been kind of common practice, and we wanted to avoid some of those things. But all of the processes around communications, disclosures, and even affiliates, all of that already exists actually in U.S. securities law.
Sure. Yeah, no, and I think that's a good framing, right? Is that there are, the tools and the frameworks already set aside. It's just kind of this last missing piece. And, if we can classify these things as securities, then they map one-to-one to these frameworks. But if they don't, then we fall into this kind of gray zone, right? And how much of this needs to apply, and how much of this, needs like a new framework on top of it. So yeah, it's an interesting observation and set of questions. And Daniel, I'm curious to get your take on here too. And I also then want to follow up with you kind of around your experience, from these Web 2 giants moving into Web 3, right? What are some of the lessons that you think apply in this situation in particular that you've seen, over on the Web 2 side at Google?
Sure thing. So the question around security or not, or what else could it be? I think that's very much framed against the backdrop of the current discussion, where different regulators kind of claim jurisdiction over digital assets. And that was not the case in 2019, where we really had to solve a very practical problem. We knew that the SEC would claim jurisdiction, and they also showed a way to come in and talk to them. That was not the case for any other regulator. So we just thought it was the safer bet to go down that route. And also, I learned recently that even if it's a commodity, it could still be a security. So engaging just like on one path was simply not safe enough. But if it had to be one, like, rather go with the SEC, and this is what we did. I think the European comparison here is quite interesting, because Europe is already a little bit ahead with regulation. They recently passed MiCA, which is the market in crypto assets regulation, where they know a term of utility token. And also Switzerland passed a legal framework already 2 or more years ago, also contrasting utility tokens with security tokens and payment tokens. And essentially, this is what we think DOT is. It's the digital representation of a right to access. It's the right to access a service or a digital utility. That's essentially it. And that's where we landed. That said, obviously, if any regulator or legislator claims jurisdiction over DOT in the future, we will be happy to talk with them. The process worked before for us, so we can do it again. They're learning from Web 2. Well, it's an interesting one. I'm quite convinced that the whole regulatory debate will evolve beyond DeFi and securities laws very, very quickly. We already see this in Europe, where they ramp up to regulate the metaverse. However, whatever that could look like. I recently identified quite a critical provision in the revision of the product liability directive that the EU is working on, that could have like a very big impact on crypto. So there will be many things coming down the line, and obviously coming from big tech, there have been engaged in content moderation questions and the question around like, to what extent can a base layer provider be made liable for the illegal acts of others or building on top? That's very much informed by Web 2. And here I actually want to come back to what Polkadot actually is. We very much compare it with open internet standards, right? Be it TCP/IP or SMTP or HTTPS, they all enabled growth for others building on top. So if you wanted to program a website, you didn't have to reinvent the whole infrastructure of the underlying internet again. And this is what Polkadot essentially does. It enables others to build on top and grow with scale. And I think if we take that comparison, no one would say that any contributor to one of these like fundamental base layer protocols that enabled like millions of jobs and really a flourishing economy and ecosystems in that space, no one would come to the idea that these contributors would be liable for anything, right? Be it under securities laws or any other law. And I think that's really like the takeaway from us here.
Yeah, and Daniel, I really like that argument for a number of reasons, not the least of which because from a consumer-facing standpoint, I really agree with the ethos that we need to be approaching blockchain almost in the same way that, frankly, we did approach HTTPS, TCP/IP, open internet protocols, right? Because it's fundamentally not the product that a consumer should be directly concerned with. They should be concerned with what is built on top, right? With the actual product, like the consumer-facing applications, the products, et cetera. And that's also where, in that same line of argument, the liability should ultimately lie, right? Because you are producing something that looks like an open internet protocol, and what someone else comes and builds on top, in my opinion, that is where the liability should be contained. And that's also where, frankly, the consumer focus and the UX should also be directed. It should not be directed, towards getting hyped up about TCP/IP. I don't see someone, getting excited about that.
I would certainly support that, Sam.
Yeah, and Josh, did you have a comment there at the end?
Oh, I was just going to say, so I agree with what was said. I also think it's one thing that I think sometimes people will say, oh, we don't want the securities laws to apply here. But I think one thing that if you're an investor or a purchaser early on and nothing's been built yet, you want the folks to deliver what they promised you in the white paper, right? And so I think that as we think about, projects and classifications, certainly there are going to be so many ways forward. I think that the process that this team went through, I think it can be helpful to the whole space. Really, I think we think that. I think also just maybe we can address quickly one criticism.
Please, yeah.
That comes up, which is people have often said, well, if it was a security and then it's not a security, is it going to be a security tomorrow? And this is why I brought up delivering what you promised in the investment contract, right? That was part of the process as well, in terms of the legal analysis, right? Really saying like, what was materially promised? Was that actually delivered? Was that satisfied? And so in my personal view, just personal musings, I don't think that a token that is not a security, if it is morphed from being a security, that it's just going to, the light shines on it in a different way and it looks like a security again. No, you need a new investment contract, right? Or you need some kind of promise that looks like another form of a security. And so I think that's sort of something that people say like, oh, how can you tell if it's switching back? I think it's also important, very important. People ask us a lot about the no action letter, and do we have one? Will we have one? I mean, certainly folks would like to have a no action letter. We understand the whole industry would like to have a no action letter, but it's important to remember, no action letters are very narrowly tailored and they're based upon they're based on an opinion of counsel, right? An incoming letter, and then specific factors that you have to adhere to. They're not a pass for the future to do whatever you want, right? And so I think that's the whole thing. There's never a promise that something may not later become a security. And we know that you could have a hairbrush and have a scheme and make that a securities scheme, right? Depending on how you offer and sell it. So I think those are just some of the things. And Daniel, I don't know if we have a moment where you've said
please,
some great
that's okay. Go ahead.
About Lizarraga's speech, Commissioner Lizarraga. I don't know if maybe you want to share something about that.
Yeah, sure thing. So Commissioner Lizarraga recently gave a speech at Brooklyn Law School. Josh was on that panel too, but he said a very valid thing in emphasizing that it was actually not the SEC's responsibility to provide legal advice to any projects, but that it would rather fall on those market participants and their legal counsels to just apply the existing law and then make their own determinations. And well, to me, that makes a lot of sense. And this is exactly what we did with our announcement. And that speech of Commissioner Lizarraga very much feels like a confirmation that we actually did do the right thing.
Sure. Yeah, because you've taken an existing framework, right, that the regulatory bodies have set across, and you have detailed, right, like these are the steps that we have taken to meet the framework that you originally proposed. And so, yeah, you're meeting the regulators in the middle here on the ground that they have originally offered. So I think obviously, as Polkadot's engagements with the SEC go forward, right, and the conversation continues, I think it will start to be, sort of a beacon for these other projects where we don't, it's not often that you get to peer inside, one of these very major projects in addition to see, like what the regulators are thinking on the other side of it. And it's so important for the space to have this type of clarity because builders are going to continue to build, right? Regardless of the risk profile, builders will continue to build and deploy projects. And they really need this type of, straightforward either regulation or clarity from, the legal teams of the builders in the other larger projects in order to build, with some form of clarity in a direction that makes sense, right? And Angie, did you have comments there too?
No.
All good. All right. No, that's awesome, guys. All right. So then two last questions here real quick, and then we'll wrap up. So on the show, we have a relatively strong slant towards gaming activities. Angie, do you have a quick comment on how you think, in general, these types of Polkadot, SEC relations, and the learnings from this might impact, some of the gaming ventures in the space today?
Sure. So Signum Growth Capital was really, our perspective is gaming, as you know. And we were really, founded with this idea. We founded the company based on the idea that as we move into these online spaces, or metaverses, which we had on our website when we started the company, into the metaverse, we still do. But the idea was really that we will want property rights. The more stuff we have in the metaverse, we will want property rights around that, and we will want those. We'll want the transfer of those to be trustless and secure. And there was a really, there was and still is a lot to fix from the Web2 world on that front. And gamers, as you know, have been buying, selling, trading digital assets for decades. Most of the time, they go outside of the rules of the publishers because there's no other way around it. So they go to places like eBay, and people have been buying, selling, trading, gold on World of Warcraft is a good example that everyone knows. So it was a combination of property rights. And then also I think that, creators are moving to the front of the line, and I view developers as creators. So we've seen this with Epic Games, the hugely positive reaction that players have had to the creative mode in Epic Games. I think that 40% of time spent is now in creative mode.
Wow, I didn't know that metric. That's crazy.
Yeah, I mean, it's really pretty exciting. And I think that Web3 will lead this effort because creation, collaboration, creativity is all part of Web3, and community. Community is the most important thing. And I think it's really hard for Web2, the Web2 world, to understand real community because they're so focused on marketing. And in Web3, we see a lot of examples of players who are allowed to build directly with their community, allowing players to create and improve content kind of as we go. That lowers production costs for game studios, and it provides new revenue streams for players, artists, brands. Now, the reason I think Polkadot is extremely important is because brands care about IP protection. And so far, we haven't really seen technology that does protect their IP. And I think that a lot of that boils down to one layer below this, which is interoperability, which is Polkadot, where Polkadot comes in. So I think that I'm seeing a lot of it in the Polkadot ecosystem. And there's a parachain called Moonbeam, which is building on top of Polkadot. Creators are creating some projects. Avagachi is one, MyNFT is one. There's several creating a toolbox of royalty and ownership tools that allow gamers to align with their fans and allow them to share in these revenue streams. And all of that works if IP rights are protected and if there is interoperability between blockchains. That is key. Interoperability is key to this hitting mass market.
Sure. Yeah. And behind that, obviously, the regulatory clarity underpinning the entire construct, needs to be in place. And so I think, Polkadot's efforts to that degree, right, you guys have done a fantastic job of trying to push forward and make sure that, the user case is clear, the interoperable case is clear, the regulatory case is clear, right? So it's an interesting ecosystem that, I will certainly be keeping an eye on. The final question here, just before I let you guys go real quick, you guys are obviously, participants across the Web3 building and venture space. I usually ask folks to give a quick, sentence on what they would recommend to other builders who are getting started in the space. I'm going to preempt it this time very slightly because I think that Josh actually highlighted it earliest best, which is that you probably should have exceptionally good counsel, right? Is that you should not, kind of try to skirt the bounds here and move around without counsel. Is there anything that you guys would add on top of that?
I could just add that, I'll just go back to something that I said earlier, which is a lot of guidance is out there already. And I think as long as projects have, pre-decentralization before they've given up their quote pseudo key, before they have, this mass network of humans that are kind of operating in concert without involvement, which is, it takes time to build to that point because of human nature. And so until you get to that point, there are a lot of really basic, I think, laws that are already put in place around communications, disclosures, and business processes.
Yeah, I really, really like that point, Angie. Lean on the existing, frameworks that we already have and just apply them to the degree that you can, in your best faith effort. Yeah. Folks, this has been a ton of fun. Thank you very much each for coming on, Daniel, Josh, Angie. Really do appreciate you guys' perspective, and it's really special to be able to see, both into a project as prominent, as Polkadot, as, you guys work with the SEC, but then also, kind of hear about how regulators and the public, are actually thinking about these things. So again, huge thanks to each one of you for coming on. Really, really do appreciate it.
Thank you.
Thanks for having us.
Thanks so much, Sam.
All right. We'll see you guys next time.